Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is October 14, 2024, and it is a weekly markets update. Let's have a look at the news of week 41 and see what are the next trends. Also, please check out my interview with Deepika Taplial, Deputy Managing Editor of Fertilizers at ICIS, that was published last Wednesday. Deepika shared her valuable insights regarding urea market trends in Q4 and her expectations for global and regional supply-demand balance in current volatile international environment. So, don't miss the jazz! Last week passed in a nervous waiting mode for the results of the Indian urea purchase tender. Taking into account very bullish market sentiment, it is unsurprising that low L1 price to the West Coast didn't attract any additional volume, and only limited volume was confirmed for the East Coast. In total, RCF was able to secure only 565,000 tons of product. 50,000 tons from Livin, which was proposed at L1, are the only tons heading to the West Coast at $364.50 CFR. And 515,000 tons from 9 suppliers will be delivered to the East Coast at $389 CFR. Market analysts expect that most of this volume will be supplied by Middle East producers, about 100,000 tons from Russian producers in Baltics, and about 30,000 tons from Southeast Asia. Clearly, this volume is not enough for India to fill its depleting stocks. At least another 1.5 million tons are required. So, we expect another tender to evolve, perhaps very soon, most likely in the next week or two. During the week, the prices increased more on the background of continuing tensions in the Middle East. Egypt FOB price climbed as high as $407. Middle East FOB values built up to the level of $365 to $70, and even higher. In general, prices in all regions increased with a domino effect, but there were not many actual deals conducted. In Iran, granular values increased to $320 FOB, and 3 producers confirmed actual business at this level. In Baltics, prilled values were indicated at high 320s level. In the US, general bullish trend was additionally supported by the threat of Milton hurricane, disrupting the shipments. But finally, the effect was not that dramatic versus expectations, and was more evident for phosphates rather than for urea. Anyway, NOLA urea barge price floated at the level of mid-330s for short ton for November delivery. Buying interest from Brazil was indicated at the level of $380 CFR, while the offers were somewhat $5 higher than that. Paper values stabilized and ranges narrowed down after a boom last week. Egypt FOB increased amid latest actual sales at elevated level to the average for October, November and December at around $400, $6 to $10 increase versus a week ago. NOLA FOB average increased for October and November to the level of $332 and $340 respectively, and dropped for December. Arab Gulf FOB average corrected downward for all 3 months ahead to the level of $362 for October and December and $368 for November. Brazil CFR average fluctuates at the level of $385, which is just marginally higher versus previous. Ammonium sulfate market prices are mostly stable. China FOB for standard product is indicated in the range $140 to $45. Granular product in the range $160 to $65. Some suppliers are trying to reach higher values amid increasing urea prices, but buyers mostly resist as the demand is not active yet. Demand in the nitrates market started to revive. Some European buyers entered the market for stocking purchases before spring season. Thus, prices for both CIN and AN started to firm. For example, CF issued a new price for AN in the UK at £340 delivered for December and January, which is £10 higher versus previous level. Spot CIN prices in Germany increased to 280 to 85 euros CIF inland, which marks almost 20 euros increase. UAN purchases in the US continues to be quite strong as harvesting campaign proceeds and gains in corn values support financial position of the farmers. Prices also climbed due to rally in urea, healthy consumption, as well as depleting stocks at producers. FOB NOLA offers reached as high as $240 for short ton last week. Ammonia supply continues to be tight and prices continue to firm, but buyers resist such high level. Thus, actual business is minimal. In Europe, offers circulate around $610 to $20 CFR, but no deals were conducted. In the Middle East, Ma'aden plant will be in maintenance another 2 or 3 weeks. Thus, supply is tight in the region. In Algeria, 2 lines of Sorfert plant are in maintenance as well, so Northern African supply is also limited. Demand from Indian DAP producers continues to be strong, and due to hiccups in deliveries from Saudi Arabia, some spot demand evolved. However, no available tons were identified. Thus, CFR prices to India climbed by $15 to the range of $430 to $65. In the US, the liquidity was low and prices kept stable at the level of $500 to $510 FOB NOLA for short ton. In phosphates, the week was marked by significant threat of Hurricane Milton at phosphates production around Tampa Bay, which caused significant price increase in the US. DAP barges traded at $560 to $75 FOB for short ton for October, while MAP traded at $625 to $40 FOB and TSP traded at $500 FOB. These prices are almost $20 higher versus a week ago. For now, seems like hurricane hasn't affected production as much as it was expected, luckily. However, there are no official comments from the producers available yet. India continues to be active in DAP purchases, with deficit remaining at high level. Current stock are estimated at the level of 1.7 million tons, while usually it should be somewhere between 2 to 3 million tons at this point in the year. This is a result of subsidy system, which keeps costs of importers much higher versus domestic sales prices. Thus, only 3.6 million tons of DAP was imported this year for now, versus almost 5.5 last year. NFL and Hurl received no offers in the tenders announced a week ago. However, last week, Hurl announced another tender for 100,000 tons that closed on Friday. We will see if it is more successful than the previous one. This week, Chinese DAP cargoes were sold to Pakistan and Ethiopia. In Pakistan, 40,000 tons lot was sold around $655 CFR for December shipment. Ethiopia bought 60,000 tons under the EABC tender from Samsung at $625 FOB China. In Brazil, there is no fresh demand for MAP. Moving to the fundamentals. European natural gas futures dropped a bit to the level of 39.7 euros per megawatt hour. General security situation remains tense, so the prices keep floating at the high level. At the same time, weather in most of Europe remains warmer than expected, so heating demand hasn't increased that much. European storages are full as never before, and Europe even lost share in the global LNG market in Q3 because there was no need in additional supply. So, if no more significant escalation happens in the Middle East that somehow disrupts the supplies, perhaps the prices will not surge anytime soon. US natural gas futures fell to $2.63 per MMBTU, extending its decline from the over 3-month high of $3, as evidence of strong supply magnified the lower demand brought by hurricanes in the US southeast. US natural gas storages increased by 82 billion cubic feet on the week ending October 4th, the most since March, and sharply above market expectations of only 71 billion cubic feet. Bearish pressure was also owed to the fallout of Hurricane Milton in Florida's Gulf Coast, which prompted houses to cut off their electricity and reduce power demand from gas generators. The developments added to similar developments previously following Hurricane Helene. Agricultural commodities future prices showed mixed trends. Wheat futures were traded around $6 per bushel on Friday, 10 cents higher than a week ago, mostly supported by dry weather concerns. Drought in Russia continues raising concerns about winter wheat yields, though rain is forecast for mid-October. In the US, wheat growing regions' dry conditions also persist, and timely moisture will be critical to encourage winter wheat emergence prior to dormancy. In Turkey, that implied import ban for wheat earlier this year, the Trade Board has announced partial ban lifting. Following the end of the ban on October 15, 85% of imported wheat will be sourced from Trade Board stocks, with the remaining 15% permitted for direct import. Corn futures lost almost 9 cents versus a week ago and were traded at the level of $4.17 per bushel amid increased U.S. domestic production estimates in the fresh WSDE report issued on Friday. There was no market-changing insights presented in the report. However, market reacted even at these small news with downward correction. Soybeans suffered some of the sharpest losses on the day on Friday after publication of WSDE report. The US soybean yield and production estimates were trimmed just slightly from last month, while ending stocks were held steady at 550 million bushels. However, this year's crop is still expected to be a new record high. At the same time, analysts were expecting to see a slightly larger cut to the yields and production. In South America, production potential for the 24-25 season held steady from a month ago. Moving to the shipping industry. Containerized freight index lost another 70 points in a week and comes very close to May level from which it surged. Costs for all destinations from China decreased during last week, while costs from US to Europe remained mostly stable. Market analysts expect further cost decrease till the end of the year. The Baltic Exchange Dry Index lost about 120 points, or more than 6% over last week. Weak activity was obvious for all segments. Capesize rates declined due to reduced miners' activity in both basins. In Panamax, the activity was more vivid after China came back from holidays with fresh demands. But still, at the end of the week, it mostly eroded. For Ultra-Supermax segment, the week was rather balanced. In Handysize, activity was stalled, with rates being stable. To sum up, Indian tender results are not surprising. Only 566,000 tons were booked, which is even higher versus estimates, by the way. And this result clearly prepares the market for another tender very soon, as India needs more urea for sure. Thus, bullish sentiment will persist in the market, also taking into account that tensions in the Middle East still haven't resolved. Ammonia price offers climb a bit more amid very limited supply, but buyers across the globe are resisting such levels, so the activity is subdued. Phosphates prices continue increasing amid production threat as a result of Hurricane Milton in the US, as well as on the background of robust Indian demand that will seek for more production in Q4. Natural gas futures in Europe stabilized and in the US even dropped due to the effect of hurricanes Helene and Milton, which resulted in decreased power demand. Wheat future prices builds up amidst uncertainty of yields due to dry weather in the US and Russia, while corn and soybean future prices dropped as a response to the fresh WSDE report. Costs of container shipments continue decreasing, and activity in dry bulk shipping also is slow, which drives index drop. So, let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.